Houses generally and UK housing markets is an emotive topic in the UK, and 2020 is no exception. With us now in 2021, we can reflect on the craziness of the UK housing market of 2020, which is best described as a boom. So in this video, we'll look at how house prices, which were not cheap going into 2020, will fare in 2021. Also, with all the uncertainty around COVID, safe as houses rose steeply. Let's find out what the experts think for 2021. Now, just to set the scene for what has passed, which I think is quite important now thinking about similar style predictions in January 2020, a year ago. So if you were told in January last year that in a few short months Britain and the world will suffer the biggest plunge in economic activity in modern times, then where do you think the UK house prices even will end up? Chances are that logical and common sense side of you would probably dictate that the expectation would be property prices would crash quite hard. Gosh, most experts, estate agents and even banks were forecasting drops as we were living through the start of the pandemic. But let's hold our horses right there. As we know, markets are unpredictable. So with 2020 now closed, it has proved to be a stellar year for the housing market, both in terms of growth but also market expansion. That is new activity and buyers entering the market, which at least for 2020 shows resilience and market support. So in short, the stellar performance is clearly indicated with new record highs as measured in house price index indicators. So as a summary, what do those indicators tell us for 2020? Well, Halifax was up 7.6% between November 2019 to 2020. Nationwide was up 6.5%. The ONS was up 5.4% to October. And Rightmove, which is a very back of an envelope calculation but does have some logic to it, shows it also being up at around 6.6% until December, guys. There's no concentration of particular properties either. That is a market-wide increase, including the well-off fleeing cities, first-time buyers, sea view gardens and all that jazz. While no doubt those becoming aware of their properties' shortcoming in the pandemic is fueling some of the demand as well. HMRC themselves have reported transactions have hit their highest levels in 5 years to October 2020. So what drives these house prices? Well, I did do a video collab on this with Anna Pandaboss a few months back, so we'll link the full video at the end. However, as we discussed, pent-up demand has massively aided that boom. Moves and transactions were delayed by the first lockdown, causing a pile-up of transactions for mid-2020. There were also tax benefits in the reduction of stamp duty, which would have a notable impact in driving purchasing decisions forward as buyers look to pocket the saving for a decision that was to be made in the near future. And it makes sense, we did the same. However, above all else, and what this year has demonstrated, which is also common sense, is availability of credit at low rates remains the main driver of house prices and the housing market, even with all the economic slumps and unemployment risk that has overshadowed this year and will continue to play a part in our lives for a while yet. Despite all of that, lenders have become a little wary even, and it is possible to secure a mortgage with 10% deposits, and those with greater equity to retain can enjoy rock bottom rates. This is particularly true for those buyers, say, who are buying for personal use rather than investing. And just to note, investors make up the minority of property transactions in the UK, despite what the media portrays. So the question is, what does that actually mean for 2021? Well, we can use a little bit of information from the past and other observations from commentators to model what the outlook is. By the way, before I get slammed on this one, it's not my view, it's all based on research. I am somewhat undecided as to what my view is, which is why I wanted to make this video, as I know there are views to support both sides of the argument. So guys, leave a comment down below on what you think. The first thing I want to talk about is the stamp duty holiday will go away, assuming the holiday is not extended. So previous waivers of stamp duty and stamp style taxes have shown that once the tax is re-implemented or rebate waivers halted, then demand dampens, and it would then indicate that if stamp taxes revert back to the status quo, there should be expectation that this will in turn slow house price growth down. And that being said, stamp tax has been a tax that has been in the spotlight for a few years now, and this would create the perfect opportunity to rethink the structure of the tax itself. One view is is actually to shift the burden from the buyer to the seller. However, that type of jiggery-pokery can go either way, guys. The second thing I want to talk about is the pandemic exodus. There's been debate that working patterns and office culture has completely shifted due to the pandemic, which is kind of true. However, the more likely impact is that the city exodus is unlikely to continue and markedly decline as vaccines roll out. While it's true that working from home will be a permanent feature of the post-pandemic world, commuting will still be a necessity. Cities remain cultural hubs and will remain a draw for those who it has always drawn in. Me, for instance, 2 young kids, but still love living in London, so don't see myself moving out. So the other dampeners coming into play from Q1 this year, I suppose. The 2 notable ones will be Help to Buy becoming more restrictive and an extra layer of stamp duty due to overseas buyers. Both these factors will no doubt damage growth in certain areas, starter homes for instance, or plush city pads for foreign investors. However, does that mean a crash? Now, I know many of you will have differing views on this, but from the research that I have been reading, a crash is unlikely. Economists are unable to really find trigger points despite the state of our nation's financial affairs. So as we all know, interest rates are one of the main drivers of house prices, and commentators do tend to feel that there will be a surge in rates. It's so unlikely because it will decimate the economic world as we know it. When looking at other macro factors such as unemployment, low rates, quantitative easing, those aspects have heightened government assistance to cushion unemployment, and so we haven't seen the wide-scale job losses which could have caused widespread selling of housing. The risk to house prices is there through rising inflation, and this will make homes cheaper over time in real terms, and that is where general inflation beats house price inflation, and so properties become cheaper over time. But that inflation remains the elephant in the room, right? And the more I read, the more divisive it is as to what inflation in developed economies in the future would actually look like. So what's the forecast for 2021, guys? Most likely it will range from flat to positive, the strength of the positive return to be determined by the UK economic recovery, no doubt. I have done a few videos on this topic and the housing market in general, so click here and here to get more au fait, as they say, and